business, financial news, analysis, and today's investment ideas.
With the price of gold fluttering above $1,700 an ounce, many investors are looking for alternatives. In today's cover story, we found a few ideas with the help of estate jewelers and an investor who must resist consuming his investment. One alternative is investment-grade Scotch. In the last 4 years, bottles from top producers like Dalmore and Macallan have gained 400% in value compared to gold, which has gone up 146% during the same time.
There are some significant short-term gains to be experienced. What I've called the icons of 2011 are a number of bottles that were released last year that have already all but quadrupled in value.
There is some risk, some lose value, but investors tend towards single malt Scotch and try their best to resist temptation.
There are bottles out there that are just increasing at such a rate of knots, and it's purely driven by supply and demand. So we've got increasing demand, and it's constantly increasing as new collectors and new investors are coming to the market.
And there are alternatives to alternatives.
Diamonds have gone up about 30% because it's getting too expensive to find large stones. There's too much restrictions going on with mining these diamonds. It's very dangerous to get these diamonds out of the ground. Keep that in mind. And there's not that many large diamonds out there.
Tobina Khan says flat interest rates are driving investors to diamonds, with many deals in the secondary market, firms that buy from individuals. Silver is worth about twice what it was 2 years ago. As for consumers wanting to wear their investment, many are opting for large South Sea pearls, more affordable than gold, that have held their value and even gone up slightly with increased demand. As for gold, where we began, commodities analysts say an emerging middle class in India and China are increasing demand.
India has definitely been the largest source of demand for gold, given their affinity for gold jewelry. That being said, China is rapidly overtaking India as a source of gold demand, given that GDP growth in China has been much more rapid than in India, and also government restrictions on individual gold holdings was lifted in 2001, which we think has kind of released a sort of pent-up demand for gold by individual investors.
But if you want to see where gold is headed, you have to watch what central banks are doing. Analysts say those in China, Saudi Arabia, and increasingly Mexico and South Korea have been buying tons of gold, not just ounces or kilos. What isn't clear is for how long they can sustain it.